Welcome to Your Money in Real Estate. I'm your host, Mark Vasilius, and this week we've got a show that is going to be exactly what I've always dreamed about. I originally envisioned this show to be about alternative investing. I've got the guru, the master, the big cheese on alternative investing. His name is Ken Craig. When he's not modeling for GQ, he's actually out there working for a company called AltaView Financial. Okay. Ken, welcome to the show.
Thanks so much, and what an intro. I got to tell you, I got to have you come to some of my seminars once in a while, and if I could have you say a few of those things, that'd be great.
Well, then invite me.
I will have to do that. Thank you so much.
Now, I also understand that back before you were getting involved in alternative investing, you were not a bad skier.
Yeah, it was a big part of my life, for sure. I grew up in Eastern Canada, but got into skiing quite young, and then eventually got into ski jumping, actually. And
wow.
I ended up spending about 5 years on the Canadian national team. It was a great spot to be, traveled the world, and yeah, that was the younger years, and here I am now.
So I guess from the ski jumping, you know, you got such big heights that now it helped you plan your life and say, I'm not going to settle for something small. I'm going the big.
Hey, listen, the one thing you can say about that is that I think being, athletes would agree with this, is that you're goal-oriented. A lot of the things that you need to do to be successful in business, I think, are some of the same things you got to apply in sport.
Yeah.
And I think so it's very transferable, and I think it's helped with some of the successes we've had, for sure.
But I got to say, you're a young guy. How did you end up, getting so, well, obviously through sport, but so focused in on such a very particular part of the investing business?
You know what? It was a family business when it got started. My father owned a company in Ottawa called Craig & Taylor & Associates, family-based company, had a partner, and I was kicking around that office from him being a little kid. I didn't know any different, really. And I spent some years working there, as early as, 13, 14, wow. 15 years old. And, it gave me a great opportunity to learn a little bit about the market as a whole. What are mutual funds? What are stocks and bonds? I actually worked in the back. I wasn't seeing clients at that point, obviously, but I was, sitting in the back and learning about financial planning and how much money people needed to save, and learning about pensions and all these types of things. And so it gave me a good opportunity to view it from that standpoint. From there, I was fortunate enough to meet a gentleman named Preston Manning, who was on the board of this.
The Preston Manning,
Preston
that
Manning
some of the older people might recognize.
Yeah, exactly. Yeah.
Okay.
And he was a great guy, and I know obviously he was involved in politics and whatnot, but I didn't know really his full involvement at that time. But he introduced me to a company. It was an alternative investment company, and it was international organization, really as big as they come when it comes to these alternative investments. And we'll talk a little bit about what that means in a few minutes, I think. But it gave me the opportunity to learn a lot about real estate, actually. It was a land-based investment company. Learned a lot about real estate, but I think more importantly what I learned those 5 years that I was there was about this alternative investment space as a whole. And the more I learned about alternative investments, the more I saw how they perform, especially going through 2008, 2009, having such a tough year for many people in stocks and bonds and mutual funds and whatnot. It gave me the opportunity really just to see what these alternative investments could do. And that's where my passion really started to drive. Listen, I love real estate, but the alternative investments was something that I think we needed to educate people, and why I created AltaView Financial Group was really to help educate people on these alternative investments.
Now, when we use the word alternative investments, I mean, some of our viewers are saying, well, stocks, bonds, different things. I know that there's other words that goes by. I've heard the word limited and I think there's a new one called exempt. Do you know anything about like the history, sort of how did we end up sort of where we're at? Because I think there's some regulations and things happening now. And
yeah, there's lots going on in that area, right? So we talk about alternative investments. Let's not make it too confusing. From the investor standpoint, it's really just like investing in anything else you've done before. The paperwork's pretty similar. The process of sitting down with an advisor is very similar.
Okay.
But it used to be the Wild West years ago, right? It was known as private equity or just the word alternative investments itself tends to scare people.
Yeah.
But really all this is saying an alternative investment, the easiest way for me to describe it is saying what it's not, right? It's not a stock.
Okay.
It's not a bond. It's not a mutual fund, which is generally stocks and bonds.
Okay.
It's not a traditional asset that's in the marketplace. Okay. And so when you go and you sit down with your advisor, you might have what they call segregated funds on the insurance side, or mutual funds, or some mix of stocks and bonds and whatnot in your portfolio. An alternative investment is just a holistic way of investing. It's just saying instead of going to the market and them investing in all sorts of different things on your behalf, you're going direct to the source. And when you cut all those middlemen out along the way and you go direct to the source, let's say it's investing in land, or it's investing in hotel construction, or if it's investing in a development itself, you've got the ability through alternative investments to really get access to things that you wouldn't be able to in the past.
Now, when we talked about alternative investing, I know you mentioned there's probably millions of types of products we can use. How did you end up particularly in the real estate side?
Well, the real estate side.
Or why did you end up there? Like, is there probably a good story behind that, or?
Well, listen to this. I talk to investors every day, and we have offices, in Ottawa and Toronto and right across the country. And our advisors are, they sometimes sit down, and a question or maybe an answer they hear from the clients quite often is this: is they say, the best investment I've made over the last 10 years has been what?
My home.
My home.
My real estate, yeah.
My real estate, my home. Now, of course, we've been in a good cycle and things have gone well, but it really shows that having these tangible assets in your portfolio is a great way to be able to invest. It gives you a lot of downside protection if you have problems in the market. And if you're not looking to move on tomorrow or the next day, the ups and downs in the market don't affect you too much. So real estate lent very well to alternative investments. It so happened that I worked for a land-based investment company that specialized in real estate for 5 years. So I did get the bug there. As I learned more about it, real estate became a big part of it. I'll make it clear: alternative investments aren't just real estate.
Okay.
There are other types of things, and even when we think about things like hotel, well, that is real estate, but at the same time, it's a business, right?
Yep.
There's a business that you're investing in. So we've done some projects with Hilton Hotels, which most of us have heard of at one point or another.
Yep.
We also do things along the lines of factoring, and it's a little more complicated to explain, but buying receivables and whatnot. And then lending to either private businesses, but oftentimes it comes back to real estate. And the reason it does is, what do banks like to lend on more than anything else? It's not your business.
Yeah.
Right? It's real estate.
They'll tie up an asset. If you go in, as everyone knows, if you go into a bank and say, look, I run a business on of something totally outside of real estate, the first thing they're going to ask you is, do you own your own home?
That's right. That's right.
They're going to want to tie up the home.
And so oftentimes that's what we're looking for collateral for our investors.
Okay.
Is we want to find a tangible asset in which we can secure your principal. Listen, when we take a look at, and when any investor looks at an alternative investment, is looking at investing in real estate, let's say, we consider that an alternative investment. If they're looking at investing in a company, you want to know what is protecting my nest egg. What is protecting that?
Now, a lot of times there's a lot of shows, there's a lot of books on investing in real estate, because that's what we're talking about. That talks about buying a rental property or renting out your basement, fixing up, renovating for profits. We're not talking about that here, are we?
No, and thanks for making that clear. I mean, the idea here with alternative investments is just this: is that we want to find a way that it's not so hands-on for the investor.
Okay.
Right. So for the right person, and I think you probably talk about it on your show sometimes, not how to buy the condo or how to buy real estate or how to fix it up and where to buy and all of this, right? For the savvy investor, for the person that has the time, for the one who really knows what to do, spends the time, reads the books, maybe watches your show, gets the ability to do something like that and can be very profitable. So no way are we saying that's not something you shouldn't do.
Right.
But for a lot of people, especially as they get on later in years, or if they're really busy with their career on a day-to-day basis, they just don't have the ability to go do that. Right?
And you very succinctly said exactly what I envisioned this show to be about, because I had 15 properties, 60 doors, property management. I mean, my whole life was wrapped up in managing my real estate assets, which at the time was a good thing. But I'm pushing 50 now. Okay, and going up on a Saturday or when my kid's playing hockey, I got to go fix a toilet, or I got to phone someone, because it started to wear on me. So I reduced my inventory from that and started saying, where else can I use my experience, or where can I keep my money in real estate without all the bloody work?
Well, that's it. And that's what alternative investments lend to. They say, listen, we've got a product provider. What we say is the investment itself.
Okay.
And there's people that manage that investment. And guess what? They specialize in just doing that.
Right.
So we can be good at real estate ourselves and go and make some money in the market, buying or selling or however you're involved. But when you've got a team of sometimes 30, 40, 50 people that have been doing this for 20, 30, sometimes 40 years,
right.
You've got a tremendous track record, experience. You've got what I consider a powerhouse team on your side, helping you garner returns in the market, right? So instead of going and buying that real estate yourself, you're able to just get involved and purchase this real estate through a third party, essentially, or through an investment vehicle, which is called an alternative investment.
Right. Now, you're touching on a lot of things that we're certainly going to elaborate later on the show, but for anyone out there that has any questions, it's a call-in show, so by all means, call in, and let's see if we can stump the guest.
Please do, yeah, I would like
with
that.
some questions, because this is a very complex sort of way of investing, and again, it's something that I'm personally very interested in doing. So I guess, take a couple steps back, but you say, okay, we're not doing the work, but we have a whole team of guys behind us. The first thing I think of is, oh yeah, well, just like a mutual fund, I'm going to be paying fees, and all of a sudden, when I rent an apartment, I'm the fee. I'm the guy that's making the money.
Yeah,
so,
sure.
So how is it structured so that I can make the same or I can make more? Like, talk a little bit about fees, I guess, when people, all these people in the background kind of thing.
Okay, well, let me say this first. If you went and did it on your own, you went and did a 240-unit development, you went and built a hospital that needed to be built. If you did it on your own, 10 times out of 10, you'd probably make more money.
Guess what? We've got a caller on the line. John, welcome to the show. I'm sure you have a great question for Ken here.
Yeah, I do. Okay, can you use registered funds to invest in these alternative investments?
Yeah, it's a great question. So registered funds are definitely something you can use for most, if not all, alternative investments. And so the way that works, if you have a RRSP, if you have a LIRA, a LIF, a TFSA, any of those registered type of accounts, and registered means your registered retirement savings plans, you can definitely use that towards investing in these alternative investments. In fact, it's the most common way that we see people get started in investing with us. They have existing funds that they've saved for years in alternative investments. Sorry, go ahead.
So what was that?
Sorry to interrupt. What's the minimum amount you can invest?
The minimum investment, it depends on how you're investing, but typically it's $25,000 unless it's, with most investments, it's around $25K. In some of them, for your TFSA and things like that, you can invest a little bit less, maybe it's $15 or $20K. But typically it's not $300 or $400 and you can't do a monthly thing. It's a little bit different than a mutual fund, but that's where it starts. By the way, it doesn't go in chunks. It's just generally the starting area is around that $25,000 mark.
Thanks for the call.
Okay,
John.
thank you very much.
All right, thanks for the call. So Ken, he's touching on some more finite things.
Yeah, sure.
But I'm guessing that each fund or each offering, because we're not dealing with a rental property, you package up a group of investments, however you may do it. Those amounts that you're mentioning, you almost tailor them for different people. Is that how that works? Like so each one is different, higher risk, lower risk? How does that work?
Yeah, okay. So I'll finish on the fee and then maybe we'll go. So as far as fees are concerned for the investor, there's no MERs that are charged generally on these things. If you are investing with registered funds, it does need to go through a self-directed account. So there are small fees associated, but we're not talking thousands of dollars or anything. Regardless of the amount invested, it's a fixed rate and it's a couple $100 a year for registered funds, for not nothing there. Going to your next question, saying, well, is it tailor-made for me? And that's a good question. I got to tell the listener or the people watching today that you've got to be careful, just like with any investment. You want to talk to a reputable firm and you want to talk to an advisor you trust.
Sure.
Because there's tons of alternative investments out there. Now, organizations like ours at AltaView and other ones out there, and there's some other ones, are able to go through all of that. Look at all these alternative investments. They've got groups of people that work internally day in, day out, doing nothing but due diligence on these. But that's not just good enough. Sorry, go ahead.
No, you're touching on so much important stuff, but I want to take a quick break.
Sure.
We'll be right back with Ken Craig from AltaView on your money and real estate.
Great.